good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia as well as Aisha Faridi. And it's been a fairly listless sort of day because it's been range bound. We have just been around that 18,600 mark for the longest time today. Now we're off the lowest point of the trading session, but just a 25-point gain is what you can see on the Nifty. In terms of the sectoral moves, it's metals which is on the back foot today. So names like Jindal Steel, Nalco, Hindalco, Tata Steel, they're all on the back foot today, and what's really gaining as far as the entire sectors are concerned is FMCG, and the gains have been led by the likes of HUL as well as ITC. ITC, remember, has been trending high for 8 consecutive sessions. It's very close to its record high levels as well. So that stock is definitely excited. The comments coming in back from the management that the demerger of the hotel business continues to be on card. So that's keeping that stock excited. These manufacturing companies are also doing quite well today. Case in point being Sirma SGS, that's high by 8 to 10%. Keynes Technology is also doing well in the trading session, so quite a bit of momentum as far as these names are concerned. And then, of course, cement names have been doing well. We spoke about how there is a price hike that got absorbed in the month of May. There's a likely one coming in June as well. So look at the stocks on your screen. All of those counters sitting with healthy gains.
Oh yeah, and earnings impact coming in for a Force Motors. That stock has been reacting. If we can just bring up the intraday graphs as well for you, holding up a good 20%, locked in upper circuit there. There are other small ones like Hika Logistics, Monte Carlo, Marks and Pharma that have all been seeing some positive earnings reaction. Anisha was just highlighting what's happening within the cement pack. It pretty much runs across the board. You've got a Sagar, Orient, India Cement, Ramco, Dalmia. The entire pack is a buzz in trade. There are reports that a price hike in the month of May has been undertaken in the southern region, and that's aiding to some buoyancy as well. In fact, dealers are indicating another price hike in the month of June as well. Then, of course, there's Jubilant Pharmova. That, of course, has come under the US FDA scanner, and that clearly is not spelling good news for this particular stock. That's been plunging hard in trade. It seems that their Montreal CMO facility has been classified as now an OAI, and the generic and the CDMO business is clearly under pressure, is what the management has indicated. There's been a management change as well. MD Hari S. Bhartia has stepped down with effect from May 31st, and it's Priyavrat Bhartia who's going to be the new MD. That's his son. Jubilant Pharmova currently lower by 7.25% as we speak. But for the overall market construct, I don't think anything changes, Nikunj.
So Aisha, it's like one step back, 2 steps forward. What is important is 1 step back and 2 steps forward. Now gradually, slowly but surely we are moving towards the new high on the Nifty. Bank Nifty, the new high is well established and there is a follow-up buying. Now within sectors you will keep on rotating. I mean, what happened, RBL, IndusInd Bank. So now large cap stocks, within the large cap banks, it's the so-called buzz or news driven mid cap banking stocks which are moving up. Case in point, RBL today and Ujjivan. One is buzz and one is news. So those 2 stocks are standing out very tall. What is intriguing for me in this entire rally is HDFC versus Bajaj Finance. So Bajaj Finance is up from the word go. It's up 14-15% from the recent low. It's a marquee outperformer in this recent leg of the rally. And HDFC Bank has just not participated. So Bajaj Finance today up another 1%. It's not far away from an all-time high, frankly. And this is supposed to be a well-owned, FI-dominated, over-owned, expensive stock. HDFC Bank, on the other hand, concerns are getting addressed, but the price action is just not picking up. So look at HDFC Bank YTD, Bajaj Finance YTD. Then we'll superimpose it from the rally, which is April end, so which is March end. So from March end, that's about 2 months. That's HDFC Bank for you, flat, absolutely flat, not gone anywhere. Bajaj Finance during that same time have definitely managed to outperform. But if you compress this into the beginning of the rally, which is that, you know, what's happened to Bajaj Finance from the beginning of the rally, let's say from March or from March end, Bajaj Finance is up in double digits. Let's take our conversation forward. Vishal Malkan joins us and you've got Nuresh Mirani. Nuresh, 1 step back but 2 steps forward. Surely, steadily and gradually we are moving towards a new high.
Absolutely. So what we are seeing is the rotation continues, the strength continues in the broader markets as well. We are continuing to see Bank Nifty do well without HDFC Bank. We are seeing good momentum in the financial space. We are seeing new leadership come in. So we are seeing a breakout happening in IndusInd Bank. We are seeing RBL Bank, smaller financial names like Ujjivan, etc. So overall, the momentum is continuing across the board, and say as we get closer to 18,800, 900, I would expect more momentum to shift towards the mid cap and the small cap side of it. And overall, till the time we don't get a breakout in HDFC Bank or a Reliance Industries in a big way, it would be tough to sustain 18,800, 900 levels. So at current levels, it's a time to be stock specific and continue to ride on to the move.
Right on the momentum, Vishal. Hi, this is Anisha joining in. Just wanted to get a sense from you about these two consumption names that have been on everyone's radar. ITC, which is at record high levels, and Indian Hotels too, which has surged as much as 20% this year itself. For those who have missed on to this rally so far, does it make sense to buy afresh?
Yeah, hi, good afternoon. I would say that both the stocks are in strong momentum. ITC has gone too far in terms of what we call the RSI levels on daily, weekly, and monthly charts. So we need to wait for a retracement. Maybe a 420 or a 410 would be a good price to enter. But Indian Hotels, I would say, is a good bet right now also because it's just got out of that 350, 360 mark, and there's a lot of potential on the upside. And of course, the sector is already buzzing in the last few days.
Okay, in the meantime, there are other counters which are buzzing as well. With respect to the result reactions coming in, you have TCI Express that just reported its numbers and EID Parry too, which is seeing a bit of a downtick. And talking about result reaction, you have Campus Activewear too, which is down about 6%. Rail Vikas Nigam is down 5%. So a lot of these counters are coming under pressure as well. But Vishal, also wanted your take regarding some of these auto names. Of late, at least in the last 1 week or so, it's a bit sideways for the entire auto pack. Would you use this opportunity to buy any names?
Yeah, I think so because as Nikunj mentioned that it's basically sector rotation which is happening. The indices are not moving that fast, but they are maintaining. That's the main thing. They are maintaining the territory which is all-time high, which is a very good sign. So the sector rotation happens, and I think once they are sideways, that's actually an opportunity to enter. And my best pick for auto sector would be Bajaj Auto, which looks like a great buy on all three time frames, like daily, weekly, and monthly charts are showing good strength. And a 5,000 target is very likely in next couple of months maybe.
Just looking at some of the other buzzers as well in trade. So Apollo Hospitals, that's holding out in trade as we speak right now. There's PFC, there's MCX, HDFC AMC is holding out pretty well in trade. And then, of course, when you talk about some of the biggest movers, that's RBL Bank holding up nearly 6% in trade right now. And there's Oro Pharma, which has been sitting right on top from the word go with a nice, solid 6% move is what you're seeing on Oro Pharma. Naresh, on the charts, and especially how you are drawing out the construct amidst pharma, because when it comes to pharma, the clear favorites continue to be a DRL or Cipla, or for that matter, Sun Pharma as well. But Oro Pharma, the beaten down underperformer, do you think it can attempt to come back?
So what we have seen over the last 1 month, 1.5 months in the pharma pack is the beaten out names have done better. So whether it is in the small cap space or in the mid cap space. So if we look at, say, what happened with the Aurobindo Pharma, we've seen a Glenmark Pharma which has done nothing for a long period of time. That stock is also up 50% from the lows. We are seeing a Lupin which has been down from 2015, making a breakout and a 1-year high. So out here in pharma, we are seeing more preference towards the mid cap, small cap, beaten down names in the pharma pack rather than the heavyweights like Dr. Reddy's and Sun Pharma and Cipla. Those three names have just been able to hold on to their breakouts and say the longer term breakout points, but there is no momentum. So out here we are seeing a recovery in the major of the mid cap and the small cap space. So if one wants to look at pharma, one has to go a little more on the lower side of the market caps and stocks which are fallen 30, 40, 50% from the top. So that is where Natco Pharma seems to be bottoming out. We are seeing a Laurus bottom out around 300, 330 levels. Lupin could be a stock which could surprise on the upside because finally the stock has crossed that 800 mark, which was a problem. So out here, focus more on the mid cap and the small cap pharma names rather than the large cap names.
Couple of other, stocks which are in focus right now. Metals at large is a little bit at bay today. So be it Inalco, Hindalco, both those stocks are down. There's Tata Steel as well, which is lower by about almost 1% in trade. And then, of course, within the Nifty, there are other names like an L&T, Adani Enterprises, Techem, for instance, ONGC after that big knee-jerk reaction that you saw in the stock yesterday after its numbers disappointed. Remember, it was a big drag yesterday, and today it's seeing a bit of a recovery, or at least it's not falling as much as it did yesterday. HDFC, Bajaj Auto as well are a little bit on the sidelines. Interesting to note that some of the auto majors are the ones which are actually drags today. So Tata Motors, Bajaj Auto, Eicher, even M&M, the big winner from yesterday, that's not doing a whole lot. It's much sitting at on the sidelines. But Vishal, just wanted your own perspective on how you're reading into the moves in auto.
Auto, I think, as I already mentioned, they are getting into a sideways consolidation in the last few days, and it's a great opportunity to get into a couple of stocks which are looking really good on the charts. One of them is definitely Bajaj Auto, as I mentioned, and the second would be Apollo Tyres, which I think is doing great on charts on all-time high levels. So Apollo Tyres with a stop of 370 looks good for a target of 430 in the next couple of months.
On auto was just marking down those stocks. In the meantime, let's just see what Jubilant Pharmova is currently, doing in trade, and that's really getting battered down, like we just highlighted. Weak numbers, debt levels have risen. In fact, we're going to get in our research analyst as well to perhaps try and analyze as to why is it that you're seeing such incessant weakness on the stock. There are, of course, management changes as well, but it's been under the US FDA scanner, and that's really not auguring well for the stock price sentiment right now. 333 is where that stock is currently in trade as we speak right now. But just looking at what the IT pack as well is doing, because that definitely is holding out a lot better than some of the other key sectors. So HCL Technologies, Wipro, Infosys, etc. They continue to hold out. But on the other hand, you've got a Techem, which is not. I don't know if we can bring out some of the market perspective and the views and opinions we've got of late on IT as a sector. In fact, we had some views coming in from Sunil Singhania as well as Prashant Jain, highlighting what they make of IT and whether or not IT has rebounded off late or not, given that IT is one sector which has definitely seen a consistent 4-week recovery play out. We will try and get that soundbite up for you in just a short while from now. But Naresh, your thoughts on IT and whether Nifty IT can continue this spate of recovery that it's been on for the last 4 weeks? Okay, Vinkesh, your thoughts on IT? Okay, we will talk autos now, and I'm going to bring on board Vinkesh Gulati to talk about what he's making of auto right now. Vinkesh, apologies, got a little, miscommunication there. But soon we'll have the monthly sales data trickle in for autos. Help us understand what is it that you're mapping in terms of what could deliver, what would not?
Thank you. Thanks for having me. Giving the data 2 days before, it's a bit difficult, but yes, I can give you the sentiments. Overall, the sentiments in the market is still positive, and across all segments, we see that year on year, the figures should be in positive. The retails are happening, and the supply issues which had been before in the cars are now seeing a bit of better position than before. Market is positive, and even two-wheeler as of today is seeing a good jump due to the marriage season, what is going around with in the North India, because two-wheeler is the sales see a big jump. And if I talk about other categories like commercial vehicle, yes, there is a bit of a challenge which is being seen today, but I am hopeful that it will be covered up. So maybe year on year, even commercial vehicle may see a positive thing, but a challenge is started seeing. And overall, the market in auto as of now is positive. So don't see a problem today. The marriage season, like I told, will still continue in June. So hoping that that will also help the coming months to be in positive because of that.
The data what we are getting from auto companies seems to be pointing something else. They are telling us semiconductor problem is over, demand is coming back, inflationary issues are behind them.
So thanks, Nikunj, for that question, because that is where FADA comes in. There is one story which comes from the OEM, the other story which normally FADA gives, which is the ground reality. And we actually give what sentiments we are looking at the customers and all. So no doubt semiconductor story is behind us, but it is behind us to the level where the optimum production capacity was there. And still there is a gap between the demand and the booking as of today, or the supply and the demand as of now for some models, which was a year back. It was a major issue because 80% models were on waiting period. But today, I feel every OEM has only 1 or 2 models which are on waiting period, or whatever the latest launches had been. So semiconductor issues are still prevalent wherever the production capacity is increasing to cover up the backlog demand. But overall, practically, we have now reached at least 3 lakh plus retail and 3 lakh plus production for the past 8 to 9 months, which has been the ever highest in the car industry of late. But yes, the gap is still there because the bookings are very high. You just heard about Mahindra, where they said some big numbers of 3 lakh plus where the bookings are pending. Even whenever you talk to Maruti, they talk about 4 lakh plus booking. But that's not what monthly sale rate. It means that the production capacity, if improved more, we'll see more retails happening. But overall, the things are positive, and if production is improved, there is still a market.
On that note, we'll let you go. Thank you so much for joining us today. But we'll sip into a very short break. But as we do that, listen into the management bites coming in from the management of PB Fintech, talking about how they'll log a profit of almost 1,000 crores, and also the word coming in from Soba Industries because the entire real estate pack is quite active.
It is a seasonal industry, so you will always have a Q4 which is quite strong, but one has to look at Q4 over Q4. So I would say when you look at Q4 over Q4, the abnormal numbers were about $2 million of EBITDA. The only guidance we gave was on our 27 numbers, and if you notice, we haven't given any further guidance either positively or negatively. So we will stick with that, and let's hope we do better than it. The statement we made was that, look, this will not just be profitable, it would make 1,000 crore profit, give it a few years, and we gave a time frame of 27. So I think next year we should put in substantial cash. I think last quarter also we put in a lot of cash into the company. So if you notice, our cash balance is pretty much the same as it was on IPO day. So we've not been burning cash. From a cash flow perspective, we are pretty much where we were.
Vinod Karki, Head of Strategy with ICICI Security, joins us. Let's connect with him to understand what he makes of the current market. So Vinod, we are up 22,000 points on the Nifty. Do you think markets now are looking bloated and they're due for a correction, or this party will continue?
Hi, Nikhil. I think this fast rally, if you may call it, from 17,000 till now, was mostly to do with what happened in March when the banking crisis started there in the US, and that kind of created an environment where people thought that domestic demand and overall demand will take a big hit. But if you look at the numbers, the high frequency data, that has not happened. In fact, relative to other economies which were really gaining traction prior to this, like China and Taiwan, they have started to fizzle out, and our fundamentals are looking better, in fact. So I think all this is resulting in this outperformance, which I think is based on the underlying trend. If you see in the GDP expansion, is driven by the investment cycle, the real estate cycle, the credit cycle, and also the profit upcycle. So I think this will continue, although I would say that valuations are now getting richer. which should which should limit returns from here on. That's the view, but I don't see any reason why the market should correct big time, because our observation all along has been that the underlying themes within the economy, domestic economy, were quite strong. Only the external sector was looking a little worrisome due to these banking crises. But even from markets like US and all, the underlying economy is not getting into that recession that people have been expecting for almost a year now. It is still resilient. So let's see how it pans out. But the external sector seems to be the biggest risk, while domestic investment cycle and credit cycle driven stocks should do much better.
Just wanted to flag out the flashes running for you at the bottom of the screen, talking about how India may cut solar panel import tax. It's likely to get halved to 20% versus 40% earlier, and that's the reaction you're seeing on Sterling and Wilson Solar. That stock has spiked as much as 6% as we speak. But coming back to our discussion, Vinod, one space that you've been very positive about has been real estate as well. What are the top bets there? What's the thesis with respect to real estate demand continuing despite the interest rate hikes that we have seen?
Yeah, for us, real estate is larger. So if you look at the breakup of the investment cycle, and that's what we have been talking about in our reports also, that the previous peak of the investment cycle was around 11-12. And if you just break it up, the gross fixed capital formation, almost 37% of the contribution was from real estate investments by households, basically. And that 37% till about 21 dropped to close to 25% odd. And as of now, if you see post-pandemic recovery in the economy, the GDP expansion has been led by gross fixed capital formation. But what people forget to see that if you break it up, the institution-wise, only two major institutions have been driving it up. One is the government, the central government capex. And the second one is real estate investments. We know that corporate capex has been slow, although it's bottoming out, but it's not really picking up to the extent we would have wanted it. But since the overall gross fixed capital formation is leading investment, the overall GDP growth, then obviously these two are driving this thing. So in the real estate for us is more to do with the overall income growth in the economy, because it's the second largest employer in the economy after agriculture, especially in the unorganized and informal segment. And there are a lot of allied activities, manufacturing activities, which are connected to real estate, which again, get benefit when the real estate cycle picks up. And we have seen this example of China and other countries where the real estate cycle has picked up, and it has really moved the entire lot of allied manufacturing activities. So I think that's the bigger theme for us. We have mentioned some of the real estate companies also, but it also moves the mortgage demand, the overall credit cycle, manufacturing, job income growth, and all that basically. So it's a big stimulus for the overall economy.
Okay, the transition's finally here at CEO. Rajesh Gopinathan, the outgoing CEO, has written a note to the employees before he hands over the baton on June 1st. Anisha, what's the letter reading like? Is it emotional?
It's a bit emotional because he's been a lifer at TCS, right? So obviously after 20 plus years, he's stepping out of TCS. So of course, a bit of a emotional, touch coming in there. But nonetheless, even if you look at the numbers, it backs the performance, right? Of course, he's talking about how he's wishing Kriti the very best as he charts on the way. They're very confident of reaching that $50 billion mark as far as the company's revenue is concerned. He says that the company's best days are going to be, are going to come going forward. So the best is not over yet. They're watching out for those days as well. And in the world of AI and automation, he says that TCS has always managed to stand out given the fact that they have been very nimble, etc. In fact, if you look at the data as well, Under his helm, the company managed to add almost $69 billion worth of market capitalization. It, of course, stands at around $143 billion now. So quite a bit of addition there. 200,000 worth of crores paid out as dividends as well as buyback. They've added almost 60 customers in the $100 million range as well. Cash conversion has been solid under his leadership as well. So, of course, quite a bit of improvement that we have seen. But he leaves the company in a very rocky stage when the macroeconomics are posing as a bit of a headwind for the entire sector. So, Vishal, Mr. Karki, in context of that, what's your take on IT as a sector? And if at all you had to take top bets, what would those be?
Yeah, so IT has corrected quite a bit, and it is getting into an interesting zone. But our experience with equities has been that valuation seldom results in outperformance. It's only the excitement around growth. And when you start seeing growth upsides, growth surprises, and even if things are expensive, they keep outperforming. So from a near-term outperformance perspective, unless you see a reversal in growth, and the growth, factors will only be, you will only be able to gauge growth when they start hiring. So the hiring numbers and the outlook in terms of growth, if you start seeing upgrades there, then from a outperformance, but if you were to just look at from a valuation perspective, long-term perspective, things are starting to get better here. But as I said, equities seldom work on something getting cheap in the short term, obviously. So unless you have growth catalysts for IT sector coming in, it will be very difficult for these companies to outperform. The valuation also has not become so cheap that it's below long-term average. It's still around that or a little above average kind of number.
Do you think best of the gains in banks are over? Credit cycle is almost midway. NIMs are not going to expand now. If at all, slowdown I think is there in a lot of big sectors like power, steel. Do you think one should lock some gains in banks?
So I think credit cycle, if I look at from a corporate releveraging cycle, I don't think it has even started. So retail has been sustained growth, so that's fine. But from a corporate releveraging or an NPA cycle, so as per RBI statistics, we are going to form a bottom in the NPA in this year, 24. So the NPA cycle is just bottoming out, while the corporate releveraging cycle hasn't even started. And that is where the whole deep cyclicality comes in, because the retail is not deep cyclical. It is more of sustainable growth, if you may call it. It continues with its robust growth. So from a cyclicality perspective, I wouldn't say that the credit growth cycle has kind of peaked out to any extent. From a corporate side, I don't think it has even started properly. So I think there's lot of runway there in terms of corporate credit cycle, and NPA cycle is just about finished. So I think it's a much longer story, I would say, the credit cycle thing. So banks, so you will have phases where they run up quite a bit, outperform, and then take a step back. But from a medium-term perspective, I think the credit cycle has a lot of legs to go.
I'm glad you could join us. Let's take a break with a intraday graph and a 3-month chart of Aurobindo Pharma. Nobody likes it, but this stock in a sense has been the toast of the town. Sub 400 for Aurobindo Pharma has now become 650 plus. That's from 1st of March, but if you stretch it slightly more, actually it's going to be sub like 390 or 380 thereabouts. There you go, almost 400, just below 400, there you go. So it's like 400 becoming 650, 40% higher in just 6 months. That's Aurobindo Pharma for you. Everybody was on the same side of the board that they will never ever deliver. And when there's too much of pessimism, that's the time the sector bottoms out. Is pharma one of those sectors which will surprise us by the time the year ends. So far, there is evidence of comeback in Aurobindo, Lupin, even Gland Pharma. These were like the real, beaten down stocks within the pharma space. So pharma was beaten down within pharma. Aurobindo Pharma, Lupin, and Gland Pharma were the worst hit, and this entire worst lot, so to speak, has come back. Gland Pharma yet to come back. I think numbers continue to deteriorate, but till the time numbers will not stabilize, I don't think Gland will come back. That's Gland Pharma for you, 40% higher. Let's take a break. We'll continue a conversation with our technical experts.
Welcome back. Well, the Nifty is holding comfortably above the mark of 18,600. The other pocket which is in focus is some of these AMC counters. HDFC AMC, for instance, is up around 4%. UTI AMC is also high, around 4 to 5%. Today, of course, there was an initiation note coming in from Nuvama. They have a target price of 2,200 on HDFC AMC, as well as UTI AMC. They're expecting the value to go up to 820 bucks, which is 120 rupees higher than the current market price. So both of those stocks are in focus on account of that. But we have earnings coming in from Apollo Hospitals. What are the internals? Because for now, the stock seems to be taking a bit of a nosedive. Shrishti, tell us, what are the internals looking like for Apollo Hospitals?
Well, yes, a weak set of numbers by Apollo Hospitals, and that's how you are seeing the stock reacting to that, because versus the street estimates, the company has delivered poorly on all the headline numbers, especially onto the profit figure, wherein we were expecting the profit at 195 crores, but the company delivered 145 crores in the bottom line. And if you will see the other headline numbers in terms of EBITDA as well as margins, they are also lower to our estimates, while there has been a sequential decline in terms of the margin figure. Not just in sequentially, we have seen that decline. On a YOY basis, we are seeing the margin shrinking to 11% right now, which is a disappointment, which was expected to be a flat margin figure on a sequential basis. But looking at the internals, their pharmacy business is something that has been the drag this time around, because the street expectation was 1,900 crores for their pharmacy business. The company delivered 1,800 crores on that front, and even their health and as well as their hospital segment, the delivery on that front hasn't been at par with the street estimates. So the internals look weak for Apollo Hospitals, and that is quite surprising, given the fact that with all the hospital numbers, we have seen good numbers kicking in, at least beating the market expectations. But Apollo Hospitals, key drag this time around is the internals and the segmental performance by the company, and that's reflecting onto the number as well as the stock price.
Amisha Vora joins us. Let's connect with her. It's been a while. We have not interacted with her on the show. So, Amisha, great to have you back. Thank you for joining us. The bull run continues. Do you think this is as good as it gets for 2023?
The bull run continues, and how? I think the best part of this bull run is the breadth of the market. And it's so very well supported, if you see this time round, by the corporate results also. We can see that at wide range of industries and companies, margin improvements are seen across mid-caps, small caps. And I think that's what is very, very well accepted by markets, apart from, of course, all the macro reasons.
So, Amisha, why have markets gone up by 2,000 points on the Nifty? Is it only the magic of global liquidity? FIs are back and markets are up. I mean, is it as simple as I'm trying to make it sound?
No, I think one of the key reasons also is that, particularly from interest rate perspective, our real interest rate is already positive, which means that threat for interest rate hike is very limited for us. And if things work out, maybe this is the peak of interest rate that we are seeing. So that's the first point when you start to recognize that economy will not have any further jolts because of the higher cost of capital. Having said that, a lot of people, a lot of investors globally tried flirting with China being cheap and it's just opening up. But as you know, nothing is working out. So right now we are in a situation where the domestic savings and domestic monthly SIP is steady. Negative inflow, or rather outflow from FIIs, is not only neutral, but there is positive money trickling in. and it's not yet like a storm, but small money has started trickling in, and this is where we are. I think this is the two main reasons for our 2000 point market rally, apart from the fact that corporate results have also supported well.
Okay, point taken. Let's welcome on board Arpit Beriwal as well. He's joining in to talk to us about technicals of the market as well as the stock-specific action. Arpit, in terms of stock-specific recommendations, are there any stocks that really stand out to you with respect to how chart patterns are shaping up?
Hi, very good afternoon. So we have seen a good momentum across indices also and broader market also. So first we go to be from the mid-cap space, AB Capital. So looking at the overall AB Capital chart structure, we have seen good momentum overall. On monthly scale, the structure is intact. On weekly scale, it has managed to surpass previous week low. And on daily scale, it is all set to give its consolidation breakout above 168 levels after 11 session. We're expecting good upside move of 4 to 5% in this counter towards 177, 180 levels. So first recommendation would be at AB Capital to buy at current levels with keeping stop loss of 165 for an upside move towards 180 zones.
Okay, Amisha, just wondering whether it's now time to tread a little bit with caution, or do you think that FOMO feeling will keep the market gains intact and one can still get into some of the stocks, even if they are frenzied or overvalued, and still make money?
So I think on a slightly broader basis, there are two things that we need to be slightly cautious about. One is at the beginning, sometime back, we heard about El Nino. Right now, it's once again predicted to be a very normal monsoon for us. So if El Nino does not happen, I think the momentum in the economy will continue. And of course, there will be some disturbances here and there because of the election outcomes, because a lot of states are going into elections. And of course, we are going for our Lok Sabha elections also beginning next year. So these are the two worries on the horizon which can keep a check on the markets. But the underlying of the economy is so strong that I feel still the markets would continue to be buy at decline. And, earlier it proved right that 16,200, 16,500 appeared a couple of times as a very strong support. So in this journey where we as a research house feel that 20,000, 20,250 is not an impossible task or a target for us in a year's journey, we think that a buy at a decline will continue to be the right strategy.
You are essentially saying that 20,000 before 31st of December, before Santa comes, Nifty will be at 20,000 plus.
It's a yearly target. So before Santa comes, we all would love it. But generally, we keep it April to April types. So post-election, maybe.
Quite bullish on Amisha's the entire manufacturing vertical, right? Whether it's a Dixon, Amber, Sirma, Keynes, you name it, all of those stocks have given you returns anywhere between 20 to 40, 50% this year so far. What's your take on this entire space?
So, they're finally seeing the whole PLI rolling out. They've been getting the checks from government on the PLI. And our broader vision to get maximum of things internally produced is also coming true. I think some of these trends are not cursory. These trends will become bolder by the day. Yes, sometimes prices run up a bit in advance, but I don't think these are the times when one should book profits and go back, sit home. These trends will continue to pick up pace and grow.
What Aurobindo Pharma, Nuresh, this one deserves a real mention. 6% higher, 5.9 billion shares. It's traded, it's actually traded what today ITC has traded on National Stock Exchange. Nuresh, what is happening in Aurobindo Pharma? Nuresh, you are on mute, my friend.
Yeah.
You'll have to press it, unmute it, and now talk.
The stock has been a volatile one over the last couple of weeks. So the last time the stock came to 640, it saw a quick correction to 580, was a flag breakout then, and now we are back above that 640 mark with very largish volumes. So out here, the momentum looks positive. The only problem is risk reward is not great because the stock is up 50% over the last 3 months. So out here, if one wants to get in, it is a strict stop loss at 620 levels and expect a move towards 700, 730. That's the major resistance for the stock, which was the high back in 2022. So overall, the momentum is positive given the price volume action today.
Auto Pharma clearly is the story today. That's been holding out very smartly. Apollo Hospitals, even though the numbers didn't quite match up with the street expectations, you are seeing a sharp reaction come in on that stock price, 1% lower right now. So just a short while back, it was actually the top Nifty gainer, and from there it slid dramatically. ICICI Bank lying flat right now in trade, ITC flat there, HDFC Bank, they're also pretty subdued in today's trading session. IT actually is the one which is holding out, and then of course there's HDFC Live, Bajaj Finance, Finserv, Kotak Bank, and then technology, which is actually looking very good. Amisha, would you believe that the worst of IT could be behind? And if someone hasn't participated in the rebound in IT, should they?
So from price correction perspective, I would say that broadly, yes, the correction is behind. I would think that, of course, price is a leading indication which takes the lead before the order pipeline, visibility, or numbers come in. But still, I wouldn't see a runaway rise in the IT packs still. I think it's time before that becomes overweight across portfolios. So it's more still a time to keep focus on domestic focused businesses and industries.
All right. Sharad is ready with what the dealing group chatter is like this Tuesday afternoon. So Sharad, what are dealers telling you?
Well, yes, in focus we are having Ujjivan Small Finance Bank, and what we are hearing from the dealers is DI buying has been seen in the stock. A large broking house has acquired 3.5 lakh shares over the last 2 trading sessions, and the important thing is volumes are also high. It's highest level seen the last 15 days, and the volumes are coming at almost 3 times its 20-day average. Now, it's expected that the merger with its holding company Ujjivan Financial Services is expected to be completed soon, and the key DI shareholders of the company includes ABSL Mutual Fund, ICICI Pru Life, and also Max Life. Now, today there was an important announcement also made by the bank itself, and they have stated that RBI has withdrawn its nominee director from the board itself, and because of that, the positive sentiments are also lifting the stock up, as the lesser scrutiny would be there. And do remember, Yogesh Dayal was appointed as an RBI's nominee director for RBL Bank as well, which is also buzzing in the trade. Apart from this, looking at the stock for Ujjivan Small Finance Bank, the stock is at a 3-year high levels, and over the last 3 sessions, the stock is up more than 10%. And if you look at the analyst community, 15 analysts, and there is a 100% buy rating coming from them with a target price of roughly 40 odd rupees.
Joining us with that quick take, yes, Ujjivan Small Finance Bank is definitely active, 7 to 8% higher. And you also have RBL Bank, which is doing quite well in the trading session. But what are the BTST ideas coming in from our technical experts? First, let's go to Arpit to get those ideas. Arpit, what's making it to your buy today, sell tomorrow list?
Yeah, so we have 2 ideas. Good momentum is seen in across mid-cap space. First is from the cement pack. Cement pack, we have seen good momentum today and in past few sessions. The first is Ramco Cement. So Ramco Cement technically is forming higher highs, higher lows on weekly scale from past 5 weeks. On daily scale, it has given a pole and flag breakout, which is a bullish price pattern, and we're expecting good momentum towards 3 to 5% upside in coming session. So first is buy at current levels Ramco Cement, with keeping stop loss of 890 for an upside move towards 950. And second stock from the mid-cap space is PFC. So overall, we have seen good momentum in PFC and RSN from past many weeks. Weekly, the structure is intact, and on daily scale, it is forming higher highs, higher lows. And in last hour, we have seen good price volume breakout. So we're expecting good 3 to 4% upside move from current zones. So at current level, one can buy with keeping stop loss of 177 for an upside move towards 185 levels.
For that, Naresh, what are your BTST ideas?
So looking at financials again, so first is a buy on Aditya Birla Capital, range breakout of the last 10 sessions. Stop loss at 167, target of 176. Second is a buy on RBL Bank, strong volume, strong price action today. could continue towards 170.75 tomorrow. Stop loss at 159.
Majority of the market men are of the view that one should stay with large banks, and that was the view 2 years ago, that was the view 6 months ago, and that was the view now also. But the real market action has shifted to an AU, IDFC First Bank, to some extent Kotak. Do you think big banks are great, but the real percentage gain actually would be in smaller banks?
Nikunj, IDFC First Bank in particular, if I take up, they have a very differentiated offering. On one hand, they have asset book, which is high yielding like an NBFC. And because they are bank and they're successful in building their fixed deposit, whether CASA, out of CASA or term, their cost is equivalent to a bank. Last 2 to 3 years after becoming from an NBFC to bank, they found a lot of challenges from the past book and COVID. Now, as we stand today, I think their growth will be very rapid in terms of ROE improvement, in terms of their book value addition, and so also their price appreciation, because the model is time tested. So this particular bank, I think, is going to be in a very, very strong business up move from here on, and profit delivery will be very strong. I wouldn't say that every other small bank that I would be looking at, because they have to have a slight niche to survive. When HDFC and HDFC Bank merge, the pressure on deposit will continue to be high. In that case, to survive that CASA or low cost deposit or have something to lend at a higher yield is going to be very differentiated. So I continue to be bullish on IDFC First Bank, but apart from that, of course, HDFC franchise, when it merges, it may take time, but it will throw phenomenal growth for next 2 to 5 years.
In this entire uptick, Amisha, HDFC Bank has been left out. Now it is an FI dominated stock. Reliance Industries has been left out. It's an FI dominated stock. Infosys has been left out. It's an FI dominated stock. So if FIs are back, I'm surprised what are they buying? Because historically when FIs are back, first they'll buy HDFC Bank, then they'll buy Reliance, and then they'll buy Infosys. Right now they're not buying all three. Chal kya raha hai?
Their interest is also, and they've realized, as I keep talking and meeting, of course, long only have to have a large cap view, but otherwise the general allocations have also started looking at. The hedge funds wants to allocate back to India. So I think the interest will be non-absolute large cap also when this tickling in of FI money is happening.
1640 for HDFC Bank. Naresh, when will this one see constructive action? I mean, 4-5 years ago, the maximum MEMS were made on SBI and ITC, and now it is on HDFC Bank. And every time these MEMS are made, Naresh, that stock tends to go higher.
So HDFC Bank is now a event-driven stock. So if you look at the last 2 years, or say even the last 1 year, the only ticks which have happened is when there has been an event. So after that big uptick to 1700 plus levels on the merger announcement, the stock drifted lower, went back to 1300. The last time we saw uptick was the possibility of MSCI rejig, which could take it. So the stock went from 1550 to 1640. Then at 1730, we got an announcement that MSCI rejig would not impact, and we are back to 1600, 1640 levels. So essentially, the case is 1500, 1550 is a base for the stock. So somebody is looking for a defensive bet with a view of 1 to 2 years. Eventually, the stock could actually break out above that 1700, 1730 mark and go towards 2000. But for the near term, it is a stock where it can continue to bore you for a long period of time till the time there is no event. So I would say as a trader, it would be difficult to buy into this theme. But if somebody is looking for a defensive bet at 1550 to 1640, one could be actually sipping into the stock and eventually expect a trigger based move wherein the stock moves up 10-15% in a couple of sessions.
The best way to play the entire consumption story in India at this point of time? Is it the likes of Trend? Is it some QSR names that you like? Or is it the good old likes of ITC, etc.? Amisha, the question is for you.
If you're asking me, then I feel that I'll be more comfortable with the domestic consumption, but that part which is durable. Because last year, this time, they had huge pressure of commodity prices rising. And also because of the overall inflation being high, the purchasing power was also getting constrained. If I see vis-a-vis that current year, the margin will have a lot of support because of the commodity prices across, whether it is oil and energy related, whether it is ferrous, non-ferrous, whether it is soft commodities or chemicals. All the prices are much sober, giving a very good support to the margins. If whosoever has taken a price rise, that becomes an additional cushion to push. This being election year, different states will start spending, giving some schemes, offers, etc. So I feel that, I would feel that I wouldn't be in pure FMCG. That also will have a margin trigger, but slightly beyond that. So it's starting from, it is not I would say non-durable Pidilite, right up to going to all building material suppliers, some of the structured steel manufacturers which provide to infrastructure, actual other manufacturing too, which goes for consumers within the basket, wires, cables. I think this entire pack will continue to do very well. And that's where one should continue to focus.
Right. Great to have you on the show. Arpit, Naresh, we'll let you guys go as well on that note.